Hello, everyone. It's Dr. K on this very nice sunny day. The weather is just getting better and better in the northern hemisphere. And Gil over at you as well, where I trust the weather's good wherever he's at.
Yes.
It's nice traveling this time of year because, and country hopping, as I always say, and I've been doing that for like the last 10 years. So it's nothing unusual for me. But at any rate, with the better weather comes potentially a continuation of the uptrend that started late last December. And with minor bumps along the way, the market has yet to really put in any kind of meaningful correction with quantitative easing in place, firing on all cylinders. And yeah, we've had some talk from Bernanke and from Japan that the amount of QE might need to be slowed, especially with recovering economies. And we do see bits and pieces of evidence, if we're to trust that evidence, that the economy is starting to find a floor and potentially recover, although that recovery, if it did happen, would be probably quite slow, excruciatingly slow perhaps. And so in the meantime, until we really see stronger evidence of recovering economies, the QE spigots remain on full blast. And this is true for all the major central banks around the world. And I think the price volume action of the major averages is telegraphing just that. We're also seeing a recovery in leading stocks. So they're starting to perform well. Tesla Motors, of course, being the flagship of leading stocks. And it's nice to see that sort of behavior because the markets have been more or less devoid of top leading names that actually put in substantial price appreciation. So it's good to see that with Tesla. It's good to see that with some of these other names that are coming around the right-hand side of their bases. Some of these names have issued pocket pivots in the last few weeks, and we've apprised members of that. There have been some viable gap ups along the way. And so the model right now is still on a cash signal simply because the price volume action on that reversal day back on the 22nd of May was pretty deleterious for the overall markets. And when central bankers start to talk about taking away the punch bowl, the party punch bowl, that is those are strong words, and the markets might essentially stagger around in a period of volatile behavior after such announcements. But it looks to me right now, based on just purely the technicals, that the market is finding its footing. So the MDM is more likely to go to a buy signal in the next few days than a sell signal, simply because the volatility is starting to ease, and the market seeming to take the Fed's announcement about the potential of slowing QE in stride. At any rate, gold and silver, of course, we wrote a piece on this recently, and these ETFs and the price of gold and silver remain firmly in a correction. This correction could go further. There's a lot of cross currents with precious metals, so it's extraordinarily difficult to predict what's going to happen with precious metals from here on. All we know is look at the technical action. That will be our guide. Right now, silver's in a downtrend within its basing pattern, and gold as well. So we're not going to touch these things. Now, if these, we can say that quantitative easing and all this QE will rescue the price of gold and silver, and they will find their floor, and then they'll break out in earnest maybe months and months from now. But that's a long time away. There's a lot of cross currents, as I said. So it's best not to overthink these things. Just go with the price volume, and price volume says stay out. Gil?
Yeah, in terms of the metals, definitely stay out, or better yet, don't bother. When there isn't a buy signal and you're in a downtrend, there's no need to really intellectualize over why the metals are coming down if QE is still continuing. I still think it's possibly related to the fact that if there is a crisis, I mean, to me it looks like QE is going on until forever. I mean, we've seen what's happened with the Japanese engaging in kamikaze QE, and you see this is the kamikaze part here where you're breaking down, and this is the Japan ETF, the EWJ. And so, but Japan is not the U.S., or rather the U.S. is not Japan. And so, you have to wonder if there is going to be also, if you think about it, there's another way to think about what's going on with the metals, in my view. And if you think about it long term, the U.S. having the dollar as a reserve currency has been able to export inflation around the world and basically get away with, living on borrowed money. Some people would say that the economic miracle in the United States over, say, the last 40 or 50 years has been bought with on credit for the most part, and there could be a reversing of that trend. So if you're looking at sort of a secular reversing in that trend, there is always a possibility, and something I'm definitely open to, without taking a rigid view one way or another, of the dollar starting to rise on that basis. Now, there's an unwinding of the long-term dollar short, as some people might refer to it. And if that happens, the dollar's rising, that may be positive for our markets, and that could drive the rally further. You don't see anything going on here other than this sort of never-ending accelerating upside trend, and a nice crack that serves to shake out some people. And and when you see this huge volume outside day reversal, you have to take pause. You have no choice but to take pause and just be ready to run for the hills, or maybe even take some profits if you've got some decent stuff going on. But I think for the most part, you watch this and see how it reacts and what we're seeing. And I think it was smart for the market direction model to only go to a neutral signal rather than an outright sell, because you really aren't seeing much breakdown. You're less than, I think you're almost right near at the high, certainly less than 1% off the 52-week high, or the peak of all the indexes. And so I think on that basis, you don't really have anything that's wrong. Now, where you start to try to evaluate this a little deeper is on what's going on under the surface with the leadership. And there is something of a rotational move once again. And I think that applying the ugly duckling theory that I've talked about, where you're trying to buy stocks coming up and around on bases, or trying to round out the right sides of bases and coming up and showing bottom fishing type pocket pivots and so on, I think you're better off there than trying to buy outright breakouts. So, and also looking, we've been talking about this in the chat room, the idea of trade the trader. What is everybody else looking for? Everybody who reads IBD, that they're buying every breakout, but maybe that's not where you want to be buying stocks, and you need to be a little bit more resourceful in an environment where we see pullbacks that get pretty scary, but they're accompanied by some leading stocks pulling into what I consider to be logical areas of support. And so I think you can step in at times, and you sort of got that feeling the last couple days. You notice when you come off last Thursday and Friday, you come off and you close in the upper part of the range, you're not getting a lot of selling, but that could partially be due to the 3-day holiday weekend. And then you gap up on Monday, which is a little bit crazy, and that sort of gave it up. But you picked up some volume yesterday on the gap down, and you close, or rather on Wednesday, and you close in the upper part of the range. So you are getting some support. Then you move up higher yesterday on higher volume, just a pinch, I think. It was roughly about even. So, not really turning around. Now you're holding tight sideways. So you could, I say could, come out of this, and I think that's definitely a possibility, and I think that's what you have to be open to, and without getting bullish or bearish one way or another. I know that there was one stock, some of you in the chat room were playing this along with me, shorting LinkedIn off of this break, and then it undercut a while back when it was up in here. We're talking about this low as being your first target level on the downside. 165.01 is this low, I believe, from early April. So you undercut that on Wednesday, and that sets up a rally. I noticed somebody on the chat room also sold into this move, which sold into that undercut, which I was very happy to see that people are learning on how to handle shorts, at least in the short term, and taking profits on that. And that's exactly what you want to be doing right there. Now with the rally back up, does it become shortable up in this area around 171, which is around these lows? I'm not really sure. It could continue higher up towards the 50-day moving average, and I think a lot of that is going to have to do with where the general market goes. I do think that you could see LinkedIn recover and build a base, possibly. You notice how the volume has dried up last week. This week it looks like, well, we'll see how we close, but notice how if you traded higher volume and you close like this, you would have to view that as an undercut of this low and some support. So this thing could turn around. So you keep your mind open here. Don't get yourself caught on in terms of trying to take a rigid or bullish bearish or bullish view here. I will go after whatever I see setting up, and I generally will go after things pretty heavily and try to trade them. Tesla's been a great name for me in May. I have in my best May since May of 2010 when I made close to about 85% or so on the short side. This is on the long side, and most of it's due to Tesla and trading some other names. 3D has been decent, very volatile, but decent. And so, sell in May and go away, that's just a bunch of baloney. So you definitely don't want to be paying any attention to those old aphorisms, right, Dr. K? It's a bunch of garbage.
Yeah, well, I mean, these aphorisms, they're not statistically sound in the sense that they don't happen, 90% of the time. They happen maybe 60% of the time, and that's not a good way to base one's portfolio positioning.
Right, and then of course there are some aphorisms that come out of left field. I heard someone on Fox Business News a while ago. I think it's that woman Jerry Willis who does a show in the afternoon, and she said, "Sell your winners, not your losers," on the premise that your losers will all come back, and your winners are obviously too high, so you want to take your profits there. And that's sort of the opposite. She's obviously never read Bernard Baruch. You want to cut your losses and let your winners run. So, anyways, everybody hearing me okay?
And of course, the market wants you to do what you're not supposed to do. We're all wired to want to take our profits and let our losses run, hoping that the losses will reverse and neutralize. So, our inner machinery, the way most of us are wired is to do just the wrong thing at the wrong time, which is, I guess, that's essentially why investing is as challenging as it is, because people have to learn their weaknesses and how to overcome and turn those weaknesses into a strength, and that's a long road.
I like this sent by actually a fellow who's a former institutional client at O'Neill at Columbia Investors, right, Bob? And he says, an Orwellian quote, or a quote from Orwell: "Doublethink means the power of holding two contradictory beliefs in one's mind simultaneously and accepting both of them." And I would have to say that that's probably the case in this market. You have some short sale opportunities, but I see more opportunistic buy opportunities on the pullbacks, and that's kind of what I've been focusing on. It's actually where I've done best in May. So, and that institutional client was Columbus Circle Investors, by the way. I just want to correct that. Since everybody, well, not everybody, but I'm getting a lot of questions about this 620 chart, and the one thing that does concern me is it seems that some people don't really understand what this chart is all about and how you use it. Somebody's asking me, if you get a buy signal, where do you put your stop? And when you ask me a question like that, what it tells me is you're not paying attention to what I'm talking about this chart. Because let's say, let's go the other day. Where were we when we got down to when we undercut that low at 165? You can see early in the morning you had a breakdown here at around 167, 168, and this breakdown here, you already had the MACD below, and that would have been a short signal. And then as you come under that 165.01 low, notice how you come around, and then you get a buy signal here. So if you were short, this move back up, you could have covered on the basis of the undercut of that 165.01 low I was showing you on the daily chart. That's this low over here. Or you could have where did that chart go? Here we go. Or you could have covered on the cross here just above 166. So if you take a position either way, long or short, your stop is across the other way. And you have to be careful, because in some cases stocks will flip around this, and you're really looking for better trending moves. But we just use this as a guide for shorting, where to cover shorts, and where I might want to put out shorts into a rally. And in this case, if we go back, I'd say it's better to go back to back up in here a few days ago, 528. When was that? Was that on Monday, or today's the 31st? That was, I think, Tuesday, right?
Tuesday then.
Yeah. Okay. So when it broke down right at the opening, you had a sell signal here. This is a very profitable short sale trade. I was very heavy in this at the time. and did pretty well, and then we followed through with more downside until we undercut that 165 level on Wednesday, I think it was. Anyways, that's really what I use it for. I don't, I'm not using it to buy and then trying to set a stop. The moving averages, the 6 period and the 20 period, the crosses and the MACD crosses, those are telling you what's going on in terms of where you want to be covering or selling if you're trying to trade something intraday. But that's mainly what it's used for. It's not used as a general buying signal or using it to generate buy signals when you're trying to buy stocks. I think just operating on the basis of pocket pivots and the Bible gap ups, I think is fine. But this is basically the chart, pretty simple. So 20 period is blue, 6 period is orange. They're both, you can make them exponential or simple. They're roughly similar. And then the MACD 6, 20, 10 and a C for close, and that's what that looks like. And that's basically the story there. If you go onto the chat room, and I think you really should, there's several guys using it who have a pretty good understanding of it, and I'm sure they'd be more than happy to talk about it with you or chat with you on it. So, I mean, there's a lot of smart people there, and I would take advantage of it whether I'm there or Dr. K is there or not, I think. In fact, listening to watching some of the conversation, reading it rather than the chat room, it seems like some of it's better. There's better commentary coming from some people than me. Anyways, let's go through some stocks. How's that? Somebody says good audio video. Yeah, I was just asking because every once in a while this GoToWebinar system will flash a little message at me saying my audio quality, I may be experiencing weaker audio quality. A couple of names I'm looking at here. You're looking at Splunk. First of all, a nice reversal here on the earnings announcement. I saw this happen yesterday after hours, and I thought about putting an order in, bidding for some stock on the pullback, because I thought to myself, I bet you they turn this thing around tomorrow. And sure enough, they are. And so I think, in my view, I think you could actually buy the stock in here, using either the low of the day here as your stop, which is down at 43.40, not too far away, but about 8%, 7-8%. Or you could just figure it's got to hold above the 10-day moving average at 45.64. That's one way to handle it. Another stock I find interesting is Green Mountain. This is a viable gap up. And the stock pulled back. There wasn't a lot of volume on the selling. I think this is more related to the market reversing last week. And so this thing comes off, but it's pretty extended here after the not the pocket pivot, but the viable gap up. So you break down, the volume's light, you pick up some support at the 20-day moving average. And I've noticed, by the way, that in a volatile market, sometimes the 10-day, and on these stocks that are moving, the 20-day can sometimes serve as a useful guide. You can see that actually happened with 3D, and you got a pocket pivot volume signature here, but it was below the 10-day, but you could have used it off the 20-day, and sometimes if a stock is volatile like 3D is, I'll sometimes use that, and it looked to me like it was setting up, and we got another pocket pivot yesterday, but I think the way this thing is, the volatility in this name means you probably want to see if it's going to pull back a little bit if you want to come in and try this move out as a buy, as a buy signal here. It's a little bit choppy and V-shaped. Also, if you're trying to form a cup with a handle, you got 1 week down. I'm going to say this is still the second week of the handle, and it may need to back and fill a little bit more. To me, it doesn't look quite ready to just launch out of here. So, I'm a little wary of this. I think it's constructive. I think the stock can go higher, but I think you set up a little bit more. So, that said, I don't think you need to be in a big rush to buy this thing. So, I think you can basically relax and let it come to you. So, some names: MTZ, Mastech. Here's the situation. I thought this was viable yesterday, and we did actually buy some of it. You break out, nice breakout, and then you run up over 10%, then you come right back in. So here's your first pullback to the breakout point. And oftentimes you can buy that, and it will coincide with a market pullback. So, and that rule, by the way, that I remember from the 1995 model book. It was a black model book, and it had names like C-Cube Microsystems in it, I recall. And Bill, I got a hold of a copy that was Bill O'Neill's copy, and it had all his notes in it. So I copied that, and I think I passed those around. You might have gotten one, Dr. K. It was a little, paperback version of
I remember
the
that.
model book. And there's a note in there that says Lee's rule, and buy pullback, first pullback after breakout to the breakout point. And it says Lee's rule, and it's underlined. And that Lee's rule, that would be Lee Freestone. So it's actually Lee Freestone's the guy who recognized that occurrence, and it's his rule. So when you hear about that, you know, that is, as far as I'm concerned, based on the model book that I saw in Bill's own notes, that is Lee's rule. But anyways, you can see the stock pulls back nicely, gets a little bit of volume, a little bit of above average volume. So, you know, in my view, the way the market was acting didn't seem like it was the end of the world, and it seemed like it was trying to hold. So I thought it was worthwhile coming in and taking some measured positions on these pullbacks. The same thing with something like, say, Green Mountain. You know, this pullback, you get some support off the 20-day. It's holding, and you could very easily just get a pocket pivot. You have to exceed this volume, but you could look at that as supporting. But you could get a pocket pivot, and I wouldn't be surprised to see the thing head back to 80. So I'm long that thing, and out of all the names today, I think out there, at least on this list, it's up 2.24%. Another one that kind of caught my eye was yesterday. Looking at this thing, closing very tight along here, right along the 20-day moving average. Here's again this idea that with stocks that are very volatile, I'm skipping the 10-day and using the 20-day. And in 2011, if you guys recall, we used the 20-day moving average on the SLV on that big move up from like 20 to 50. So let me just go back to that, and you can see what I'm talking about. You had support here at the 20-day, and I think you had pocket pivots coming off of the 20-day, and here, like right. This is actually up through the 10-day, and let's see what else. But we were using that as our guide, you know, on the way up. And you've seen that happen with some other stocks in the past, where I've seen the 20-day can come into play, and I think that's basically a function of volatility. And that's basically, you know, what the deal is there. And so I will use that. And so you can use it as a guide. So if I see stocks, you know, dropping through the 10-day, but finding support at the 20-day, then that catches my eye, especially if it looks constructive. So another one I think is worthwhile looking at here, and I own a little bit of this, is you see the same exact thing in Illumina. You see the pullback comes back to the 20-day, and this is an exponential 20-day. You could use a simple, you know, whatever. They're roughly the same. And so it bounces off of there and comes up, and maybe now you're going to set up on a pocket pivot. For those of you who missed Valiant Pharmaceuticals on this big move on a buyout, maybe Illumina, whoops, missed the I there, which there was a buyout rumor here, and that thing ran up. And I remember I was in the chat room at the time this happened, and some people sold into that and did pretty well. But now it's setting up again, and there's still that possibility of a buyout rumor out there. So who knows? I forget what it was exactly. But anyways, what were the other? Oh, this Vertex. We were talking about this earlier. This just barely missed being a pocket pivot, it looks like to me. But to me, that's good enough, just about, I think. And I've been watching this thing for a long time. They've got a big cystic fibrosis drug. They're also working on a drug for what is it, HCV, herpes, or hepatitis C, not herpes, but hepatitis. Isn't herpes a form of hepatitis, Dr. K?
No, they're different.
Okay, well, it's hepatitis.
Yeah, hepatitis says hepatitis A, B, C, D, E. I was like, there's lots of hepatitis, and herpes is a different thing altogether.
Okay, good. Good to know. Thank you for that. Anyways, we don't call him the doctor for nothing. Anyways, I think this, you know, I've been watching this for a long time since this Bible gap up. It's a pretty nutty break, but again, you see how it nudges right into the 20-day moving average, and then you're popping up. You pick up some volume. And I actually put this on my buy list the night of Wednesday night. I put together my little list of 5 to 8 to 10 stocks that I'm really focused on. And this one and PCYC were both on my list. And so, you know, coming in, the little pullback today gives you a second chance to buy. I think stock could go higher from here. And I would watch for possibly some sort of confirmation in terms of higher volume. But, you know, it looks okay. But crazy name. PCYC is another one that's been working. We had a pocket pivot here. So again, here's this concept of a stock rounding out a base, and now you're breaking out. So this is probably not where you want to be buying it. You want to already be in. This would have been a good shot to come in here, I think, as well, because you're a little bit ahead of the crowd who's going to be looking. You know, when it breaks out here, IBD will be telling you, oh, it's a cup breakout, and then things going to come in. So I think by that time it's coming in a little bit. Tesla, or it's due to come in a little bit. Tesla, I'm sort of watching this to see if the 10-day moving average catches up to it. Pulling back down to the 10-day from here would be right on top of this little flag. The one thing that bothers me about this is that it's only a little 6-day flag. You get this nice outside reversal day as volume picks up, and then it comes out. And what bothers me is very short, so my fear is it's prone to failure, or at least a sharp pullback. And so I'd be watching this. You know, all the news right now is out on Tesla. I listened to their presentation yesterday where they're going to build out these supercharger sites in the Midwest and elsewhere. And Elon Musk was talking about taking a cross-country trip in his Tesla, and the idea of going cross-country in your Tesla essentially for free because you can stop at these supercharger sites and charge up your car in half an hour for nothing, for free for life, which I think is a nice sales gimmick, and it actually has practical use as well. And they're just talking about expanding their network. By the end of 2013, it should be, I think, 150 sites they're talking about. I forget. But you can go on the Tesla site, and they actually have a cool map. You can check it out if you like, and you can see what I'm talking about. But I think the stock is viable. You know, Dr. K and I are working on an article right now, and it's going to go in the Forbes blog comparing Tesla to General Motors in 1915. I've talked about this many times, but if you guys go to page, I think it's page 14 of O'Neill's orange-covered book, How to Make Money in Stocks, the latest edition, you can see General Motors, it looks like it came public in 1911 and then went sideways for 2.5 years, and then in January of 1914, it flew, and I'm pointing to Tesla's chart because they're very similar, because Tesla basically, you know, from a practical standpoint, went sideways for 2.5 years, and then flew out. It's flying out of this base, and there's its first move. Now, General Motors back then went from about 34 to over 80, and then it went sideways for 9 months. You got to take out 4 months of that, though, because they halted the markets because of World War II. So, you know, there's 4 months when it wasn't trading, and but the point here is that you think something's over with because it's more than doubled, which Tesla has done, and I think this is comparable to General Motors' move from 34 to over 80 back in 1914. But 9 months later, 5 months later, really, in terms of market time, because you have to account for the period that the market was closed up during World War I, the stock went sideways for that period of time, and then broke out again and ran up. I think it's 471%. You have to check the book to make sure.
Yeah, that's right, 471.
Yeah. So the point here is that when you think something's gone up too much, you may this thrust could just be telling you that this thing is just starting a phenomenal price move. And what I would be looking for, and this is what, you know, the essence of the article that we're writing, and don't be silly thinking that because we're going to put an article in Forbes about this that you're going to go buy the stock and somehow it's going to jack on the article, because if the point of the article has nothing to do with the fact that it's going to 200 tomorrow, the point of the article is that if you miss this move, then what you need to do is keep an eye on Tesla and watch it build a base. It needs to build a base in here somewhere. And so you watch the stock and let it build its base, and then it will provide you with a second buy point if this is for real. And I think in many ways that could be the start of the real move for all you know. So to me, the market's all about possibilities, never about, you know, rigid views or beliefs or pessimism, you know, thinking nothing can go up more than it already has. And, you know, I'm all about possibilities in the market. I think that's where you make your big money, is being open to possibilities and figuring out a way to gauge them. So I think in the example of Tesla, this could have a bigger move. Right now, I'm just watching this thing as it pulls into the 10-day moving average, see if you get some support there, and you know, just see what happens here. So let's see some other names. Of course. You know, not really much to say here. You got a breakout if you draw a line across the tops here. It's sort of a cup with a handle breakout here. Now it's settling in. Volume's maybe going to come in a little lighter than it did yesterday, possibly, but it probably needs to settle in. So you might look to buy a pullback in here down to the 10-day moving average, perhaps, if that's set up, if you didn't buy in already up here. But here's another example of a stock, you know, making a comeback. Another leading stock that gets knocked down and sets up in bases again. So, you know, some other ones I've been keeping an eye on here, and bought a little bit of this yesterday right off the 50-day, is the Bonanza Creek Energy. You know, it's forming a cup formation. and it looks okay, and this could continue to round out. Great numbers, I think. I tend, if you're going to play fracking, these guys are big in some fracking field in, I forget, somewhere in the Midwest. Then you have Silica Holdings, which is another one trying to round out. You're not really getting some definitive moves here. You had a pocket pivot here off the 10-day moving average, but you were under the 50-day moving average. But you know what? This worked, which I thought was very interesting. And the stock has gone higher. So you could, Dr. K, can you buy pocket pivots like this even when they're under the 50-day? What's your take on that in general?
It's contextual to the chart. So the price volume action, if the base is rounding out and getting constructive, and it issues a pocket pivot like it's done here under its 50-day, in context with the preceding price volume action, you could take a position. Just as you can see, there's a lot of support at the end of April that came in to the stock, and then it needed to do more work to round out its basing pattern, and then you get to the pocket pivot. So I wouldn't go in full bore. I would go in maybe with a half position at most in this kind of situation.
Yeah, just kind of test the waters here because it is turning, and we know that this theme has worked, and it's been a lot better than trying to buy breakouts. So another stock, we're keeping on it, was the DDD. I think I already talked about this, but watching again for a pullback. I'm watching it come in right now. So Tesla into the 10-day, 3D into the 10-day if that occurs. Somebody just asked another question about these charts again. This chart, it's a 5-minute chart. So, but like I said, go on to the chat room and talk with some of the people who are using it, and they seem more than happy to explain things to newbies and try to understand that it's more an intraday trading tool. In some cases, if I'm shorting, it's helping me keep track of where I am and when I should be taking profits or when the stock is likely to stage a rally. So, Dr. K, why no BGU report for Krispy Kreme donuts today when Pocket Pivot and BGU reports were issued in the past? Something not right with KKD. Actually, we talked about it this morning, and to me it looks so okay. I mean, but the only thing is I wouldn't be buying it up here. I'd buy it down at the lows. What's your take on that, Dr. K? We did talk about it. Was there a reason why you didn't want to put it
right. Basically, it issued a pocket pivot yesterday, but it had if you look at the 1st and 2nd of May, it had two heavy volume sell days breaking through the 50-day like that. So that was a bit of a defect in the pattern. So yesterday's pocket pivot to me was, ahead of the earnings report, a little bit too much risk. And I think people agree with that. You want to make sure if you're going to buy right before earnings come out that the preceding action is going to be a little more constructive than what we've seen. And in this kind of market environment, I'd rather be on the safe side than on the sorry side. But of course, this one has done very well today on the gap up. It's up about 17%, which is it's quite extended at this level. But we're going to watch it and see how it behaves from here. And if it gets closer to the lows of the day, then in other words, the risk comes down, and it could be actionable at that point, because it hasn't done anything particularly wrong prior to March. It had a nice viable gap up, and then went sideways and continued to stair-step higher since then. So it's one for the watch list at this point.
Yeah, and I think now Krispy Kreme is now the new donut leader. So if you're into the donut group, I think you want to go with Krispy Kreme. So, anyways, which edition of O'Neill's book has a 1915 chart? I think I said that already, but I know you guys are probably at work, and you probably have your assistants and all your minions and underlings hollering different things at you, so you're not able to watch the webinar as closely as you should. But that would be the most recent edition of O'Neill's book. It's the orange cover. Let's see, INVN. Yeah, this one comes up. I love this stock. It whenever it acts well, it always screws up. But these guys are still making these motion sensor chips, and I guess there has been some strength in semiconductors. I've been watching. I think this AMBA, it might be viable right here off the 10-day. I think this is a great story. A squirrely stock. I mean, it's squirrely as hell. Gaps up here. You have a viable gap up. I also heard we got an email from somebody saying that people at an IBD meetup were whining about the fact that we were late our signals are late, and they only cited Ambarella as one example. But right here on this day, we did mention the pocket pivot, I think. Or was it this day? One of these days, and that's lower than where it is, and then you have the viable gap up. It's possible we could have come in on this viable gap up later in the day because we wanted to wait to see where the low ends up, and we don't put that out right away because we're not sure if it's going to hold up, and we want to give it a chance to at least establish the low and see if it holds up. As it turned out, it didn't. So Ambarella, the best place to come in would have been on this gap up move. I guess that's a viable gap up, but that also fails. It's a squirrely stock, but I would treat these more as pocket pivots. Now you're tracking tight along the 10-day moving average, and that looks like it wants to go higher to me. So, and we have a little bit of this, but we're just kind of testing the waters here.
Yeah, and also it's easy to armchair quarterback when you look at May 6th. And you look at what the markets have delivered to us for the last 2.5 years, it's been very treacherous. And so being that AMBA is an IPO and being that markets were still not quite right, I wouldn't go into a thin name like AMBA on May 6th simply because of the conditions. Again, you want to protect your assets. That's the first rule, is always control risk. And risk has been more or less off for 2.5 years. Now, finally, names are starting to come around their bases, and then AMBA is starting to look alive. The more good names that are posting constructive price-volume actions, the more confidence you can have in the market. But back on May 6th, there was less confidence at that point, and for something as thin and IPO quality as AMBA, it wasn't worth the risk at that point.
Somebody wants to know, Dr. K, when are you going to get? What's it going to take for you to get on board Jazz?
That
well,
one.
You're not going to get on board here, that's for sure.
Yeah, this one's been, talk about squirrely stocks. This one has had a history of intraday massive price moves because of the squirrely market making that goes on in this name. So I got sick of the stock.
Higher.
Yeah, quite a while ago I got sick of it, and then you'll see, for instance, November 9th it had a spin out as well. And then it had a gap down after earnings on May 8th. So there's a lot of caveats. There's a lot of black marks this stock has on a technical basis, and there's other names out there to play. Now this one's going higher finally, but I have no regrets. I don't like playing names that are squirrely like this because at some point you'll end up for those of you who bought this say around 60, low 60s, and now are sitting on a profit. A friend of mine at O'Neill, who is very seasoned and retired, I think he was at the age of 34, he said, buying this name and having it work for you could be the worst thing that happens because it'll start conditioning you to ignore defects in the pattern like the gap down on May 8th and like the squirreliness in terms of how the markets make this stock. This is a name he would never touch, not in 100 years, because of the risks involved. So keep that in mind. You know, if you did the wrong thing and you made money, that could be treacherous for your trading habits. So you know, always keep a diary. Keep a diary, and something like this. If you bought it and you're making money, put in a big red mark saying, "Hey, this is a defective pattern. Maybe you should not have bought
it." Yeah, I think in this environment, though, a stock, remember, it's the ugly duckling market, and so if it has these ugly duckling characteristics, I think they work, and that seems to be the case in this market, you know.
Yeah. What was it?
The uglier, you know, like even with Splunk this morning, I was looking ugly this morning. It's like buy it, you know. The story's still intact. They're guiding in line. You know, there's only potential for them to beat going forward, I think, and you buy these things and they act well, you know. But it's that kind of a market, you know, and I think you do sort of have to think outside the box. So those of you who have defied us on this one, even though we keep pointing out to you the negative characteristics in the chart, I don't know what's wrong with you guys. You just go ahead and keep buying it, and you keep making money, and you know, we're just offended by that, but. You know, that's this market, but in a sense, it tells you kind of what's going on under the surface. So, money is moving in, and the things aren't necessarily having to be perfect here. And in a lot of ways, the way the market acts is not really perfect either. So, you know, so those of you who bought it, despite our better advice, you know, more power to you. But it just shows, you know, we don't know everything all the time, and Dr. K raises some good points. And I think if you own the stock, got a 10, 15, 20% profit, it can't hurt to bag some of that, maybe. I don't know. SGI, what is this? Is this Silicon Graphics?
Yeah.
Okay, is that what this is? Boy, that's a blast from the past. This is another hardware peripherals. I think you throw it in with semiconductors, trying to make a turn. You got a cup with handle breakout today, so it's got a 1-week handle on the weekly chart. So if you like it, I guess you can buy it. Cheap stock. I'd rather own this one. I like this Paracom. Have a little bit of this one. Bought it off the 20-day. See how this one follows the 20-day. This morning you had a chance to buy some on the cheap. Great numbers. So if I'm looking for little $15 stocks, I kind of like this one. I kind of like Ambarella's okay. The only thing I can't buy huge positions here. Someone's asking about blocks. I think blocks. It's a thin stock. So for my blood, I have to confess though, I bought 5,000 shares yesterday on this pullback. And not a huge position, but just kind of nibbling. It trades about $500,000, a little more, 570. So, if I'm 1% of the average daily volume, I can stomach that. But it's definitely not going to be a stock that I can jam into and take a huge position. But you have the Bible gap up, and it drops below a couple of 3%. So, normal porosity on a thin name. I like the story. It looks pretty decent, but it's a thin name. But those of you who are able to play thinner names, this might have some meat behind it. It's got earnings and sales. It's not like some of these other things like that we've looked at, like Yelp, which is kind of weak, or Angie, which is trying to hang in there. I think this might have a little more potential. It just seems on a fundamental basis. So that's my call there. That said, something like Angie's just trying to hang in there, and it's flagging. Notice how it's bumping into the 10-week moving average here. But also notice how it is holding, trying to hold along the 20-day, and the 10 days in there as well. So you might see some sort of a pocket pivot coming up through there. FLT, I hate this stock. Breaking out, stalled a little bit, but actually broke out here, no volume, and then picks up some volume. But it's acting okay. I think if you're going to try and buy, you'd need to pull back down to the 10-day, which is always a possibility. But that actually hung in there okay. Now if you call this a 3 or 4 weeks tight, yeah, but here's one of the problems with this. You notice every week is blue, so each week is up. And what you generally want to see is you want to see them slightly, drifting to the downside. That's why I like with this Vertex. It's trying to hold in tight, but it's got to drift to the downside, And so on these flag patterns, that's kind of what I like to see. Doesn't mean that they can't work. So let's see. Give me 1 second here. I'm watching Splunk moving. That looks pretty good there. Maybe it if you get above, what do you need to trade above here, Dr. K? 2.398, so 2,399,000, say, so 2.4 million roughly. Yeah, you get above there, you got a pocket pivot, and that doesn't look too bad actually. You guys are probably all running it up because I talked about it. Anyways, let's see. ALKS.
Well hit today, actually.
What's that?
This could very well hit. Oh, I'm going to put out something on it.
Okay, for the masses.
Watch.
Not the exclusive webinar crowd that we have here. Now, Alchemy's Bible pullback. I don't know. You tell me. It's right on top of the base. Notice it's coming to the 20-day moving average, where it seems to find support previously on the roundabout here. And I'm going to make up this new term called roundabout. And when I'm talking about that, it's when stocks are forming a base and trying to round up the right side. So they're roundabouts. That's my new term. That'll be in the next book, so memorize it, please. Anyways, you get, here you have coming down to the 20-day. Maybe it's viable. I don't know. Maybe is somebody downgrading it today? I don't know, but possibly. High Crush LP. I got a broker friend who I guess over at UBS who he did like 60,000 shares down in here. They did a secondary, I guess, over there. So he took it down. He is a big hitter. I think the biggest producer in that office. Very close friend of mine, actually, and the only broker friend I have, actually. Well, actually, I take that back. There's one ex-O'Neill salesperson who's a broker now at Merrill Lynch, but they're pretty much a piker. So, but my friend over at UBS, he's a big hitter, but he took down a bunch of this and is very happy right now. So this is jacking at a viable gap-up move here. We talked about this 3 days ago, 4 days ago, and past because it was thin. But Dr. K, I got to give you a bad time because you like this, and this is thinner, but you like the uniformity and the fact that it trades on the New York Stock Exchange. But this thing was
The risk
going, and
pattern is really tight, relatively speaking. So I mean, that's obviously a big consideration: is how much volatility are you going to be dealing with in recommending a stock. And so even if it's thin, but it's trading in a constructive way, that goes a long way toward the recommendation.
I'm watching Tesla, maybe trying to bottom here. If you're watching the 620 chart, anybody, let's take a look at this intraday. This is the special intraday feature of the webinar. You can see you're trying to push out a low here. It's possible it's trying to bottom, but again, within the context of the overall pattern, what does this thing really need to do? I think it needs to meet up with the 10-day. So, meanwhile, I go after other stocks, and they seem to be working pretty well today. Let's see. HCLP. Yeah, someone says great chat room call, Gil. I guess I was in the chat room that day on that when it happened, and it's worked. So. Is Trip going for a trip? Well, it's been on a trip. It broke out here from this weird-looking base, and let's see, did you get no other buy points, but it's acting fine. FB short. I think up at the 200-day moving average, it becomes a short. I think you topped out today at 24.95, so you got pretty close. I know in the chat room we're talking about this, and somebody was trying to short it in here, and they made a few points, maybe a buck. But one of the things to think about. If you look at this, here's your left shoulder, your head, your right shoulder, and so you draw your neckline. Let's see, where's my pen thing? There it is. If you draw a neckline here, okay, you're breaking the neckline, but you're also dropping below all these lows. So in my view, contextually, the place to short this thing was what did I do now? These lines out here. Contextually, you already are down a lot off of this peak, so really the short spot was as it was coming down to the 50-day moving average. Now that you've undercut the neckline, it sets up the rally, so the next spot becomes a rally into the 25 area, which is the 200-day moving average roughly. And yeah, I think Facebook is a dog-eat company, but and I know I've bragged on them before. They looked like they were going to turn here, but nothing doing. Their phone got canceled, but we knew that was a junky phone, right, Dr. K, from the start. So
yeah, they never had the market share or the momentum they needed in such a competitive playing field.
Let's see. Somebody's asking a question. Oh wait, I'm gonna get to Amazon real quick. Amazon, a nice jagged pattern on the weekly chart. I don't know. It's all over the place. I don't really like the base. I just think it's one of those stocks that moves around with the market. Let's see. Somebody says, they say you should never let a winning trade turn into a losing one. Okay, I agree with that. Do you have any suggestions or thoughts on a percentage or amount that you might apply here, or does it depend on the trader or instrument? What instrument? I don't know. I play guitar. Dr. K, what instrument do you play? Piano, right? So I guess the profitable trade by a few dollars obviously doesn't make sense to apply this rule. No. But, I think you just placing a stop somewhere at where you bought it, and if the stock pulls in, you're not going to let it turn into a loss. That's a tough question to answer. You want to answer that, Dr. K?
In terms of just Amazon and the quality?
No, just with respect to any stock, the question is, they say that you should never let a winning trade turn into a losing one. Do you have any suggestions or thoughts on a percentage or amount that you might apply here, or does it depend on the trader or instrument?
It really is contextual again to how fast the stock is moving, and also to the relative market. Because in markets like 2012, a winning trade is only going to maybe be 15%, and you don't want that turning into a loser. But in a market like 1999 that's on fire, winning trade is going to be 70% or higher. And a 15% gain in 1999 is well, it's just getting going. So if that 15% gain went back to zero. That's not a problem, especially considering how much upward volatility there was in a number of names back then. So keep it always in context with the market. But that rule definitely is a general guide that certainly holds true.
Sorry, I had to send a message out. Let's see. Was it move on SNTS at climax top? No, you're not. I don't think so. What move would that be? Let's see. They're talking about 522. I guess this move. No, how could that be a climax top? It's the biggest point move, but it's not. It's not really. It's after a pullback and finds support along the 20-day moving average. So that's definitely not a climax top. I think you need to see this thing go parabolic. Right now, it's just kind of staying in a nice uptrend channel. Let's see. I'm just going back and forth with my trader right now. Nothing that important. Let's see. Toll Brothers. What do you think of the builders? They suck. That's probably why you buy them here. Ryland. They're all pulling back. The last time they did this, they all came out and turned around. Maybe this is where you buy them. I think Lennar was also getting hit. DHI coming all the way back in and filling the gap. So they suck. And hold on a second. Getting more. Okay. Lumber liquidators pulling all the way back in, but it had a nice move. I think though the 50 days, ultimate support here, couldn't even hold the 20-day. So, the builders area, the building, the home building area, I'd say looks kind of weak, and you're seeing these mortgage players as well all came back in. OCN's holding up a little bit better, and I think so. So that's kind of an area where you're rotating away from, okay, and you can see, I think some areas where we're rotating back. Cree, I still think is a great long-term stock, and I think it's a little bit confounding in that it tends to move. Tends to move around and shake around. You don't really get a pocket pivot in here. This day was not too soon for a pocket pivot, and it stalled out. And then this day, yesterday, you had a gap up move. Well, not really a gap up move, but just an upside sort of breakout. If I like the stock and I still think the story is intact and I still think it's fine, it just drives me nuts because I bought it and sold it all along in here and it's really done nothing for me. So, I prefer the kind of love that you get with a Tesla or a 3D coming up the side, that sort of stuff. Or even, what was another one that's been moving lately? There's been a couple stocks like that, jack into the upside. Or even, yesterday's move on Vertex is nice. So it's a little more coherent. But Cree, I think, though, is a good stock, and it's fine, as long as you can handle the sort of choppy slowness to it, which means, now I'm fed up with it. It's probably going to go launch over 70. So somebody says, ask a question, can you discuss some of the intraday and daily screens that you run? I don't really run that many screens. I just run combined up on volume on both exchanges and combined down on volume, and I just watch my list of stocks intraday. There's no magic screens that need to be run in my view, and I think that's part of the myth. Everybody thinks that we run these magic screens and they output all the stocks that are going to move that day. It's just a lot of hard work. I go through a lot of charts. After the close, I go through my high growth stock investor software and I download there. It's a daily download at the end of the day. I'm waiting for them to make it real time because I think it's a great system, and that's where some of my best ideas come from, is going through those charts and then coming up with my list of, I'm going to say 5 to 10 actionable ideas on any day or stocks to watch, and I'm just watching a lot of these things really closely. So that's really how I operate. There's really no magic screen. I think, Dr. K, you probably have a couple screens, like a pocket pivot screen that you have.
Sure. Various ones within, of course, the pocket pivot formula.
But, to me, it's not really about running so many screens. Like I've said this many times, you can use the IBD 85 index, you can use the IBD 50, and just focus on those lists and just get to know those stocks really well, I think that that's really the key here. And let's see, I need to... Give me a second, everybody. Okay, where were we? COG, Cabot Oil and Gas. Well, I talked about, like in Bonanza Creek, BCEI, it's acting okay. You had a breakout here. There's slow butts to China. Tesoro's the refiner pulled back to the top of the base. I think you've seen a few other oil stocks acting on. Somebody asking, is DGE finally coming? You mean DGI, right? Okay. Is it finally coming around? Well, you tell me. I mean, the stock's holding the 50-day, and you're moving up. You're trying to break out. To me, it's been a squirrely stock, so not something I've really been all that interested in. And you know, so on that basis, it looks like it's trying to come around. But you know, 3 shakes in here, 1 pullback, 2 pullbacks, 3 pullbacks. Maybe now it's going to get going, and it's just starting to break out. I don't think, however, that you've got much in the way of volume this morning. Take a look at that. Yeah, it's 30% below average right now for this time of the day. Let's see, we're getting towards the end of the hour. We'll probably go another 10 minutes here. DDD, any concerns about the late-stage base? Not at all. So, you know, you don't know if something is a late-stage base until it is. And if you're going to try and guess whether something is a late-stage base before it fails, then I think a lot of times you're just getting hung up on having to label things. And I think that the late-stage base is something to take into account when something starts to fail. But otherwise, you know, I think just looking at a base, oh, well, this is late stage. I personally think this is deep enough, and coming all the way down to test the 200-day moving average, the 40-week line here on the weekly chart, that's enough of a correction. I always remember First Solar way back. Let's go back to this pattern back in this formation. I remember, you know, IBD writer was saying, oh, this is a 40-something% deep jagged cup, and it's not improper. It's improper, and blah blah blah. And then the stock launches and goes up nearly 3 times. So, you know, was this late stage? You know, an ascending base here. Is this late stage? And if you get hung up on having to label something, then I think you just get left behind. I think just base it on the action. That's all you need to worry about, and or even think about. Forget. Just throw that term out of your vocabulary. Worry. You know, concerned. You know, it's a bunch of BS. Worried. Am I worried about it? If this thing blows up and breaks down through an area of support on huge volume, then I'm stopped out. Okay, I'm not worried, and I'm not concerned. I'm going on the action that we see so far. So you know, you got in early on this one here. You had another buy point, a couple of them in here. You don't buy the breakout because everybody reading IBD sees that, and then of course they all get stopped out because it drops more than 8% off the peak. But that's okay. We can come right back in and enter on the pocket pivot, and you're doing fine. So, you know, Dr. K, you want to expound on the concept of late-stage bases? And to me, it's just another Achilles heel of need for heuristic labels as an Achilles heel, right?
Right. These labels don't do any justice generally. I mean, sometimes what happens is they keep you out of an amazing move as the stock has its final climax run. And simply because you're saying, oh, well, it's a 4th-stage base, I'm not going to touch it up here. But that's where, if you look at these model book stocks over the decades, some of these end with a bang, where they will literally double or triple inside of just a matter of a few weeks. And I remember Taser was one of those stocks that just kept going higher and higher and higher, to well beyond nosebleed levels. And then when it finally broke out of its final basing pattern, I mean, there's a lot of people who didn't touch it just because it's just way too high. I think it had already moved up something like, you know, 2,000% or more. But that last base breakout was super clean.
2003, right?
Yeah, so it would be 2003. And the final base breakout, it was an easy double. It went up more than 100% in just a matter of, I think, a couple weeks, and it was free money. I mean, what I call free money. But a rule like, oh, it's a 5th-stage base or 4th-stage base would have kept you out of names like that. Or there's also rules that say, well, it's gone up too far. It's too far ahead of its moving average, or, you know, you got to look at it in context with what the stock has done and where the market's at. And 2003 was a very powerful year for the markets, and so something like Taser could really show its stuff, you know, until it finally did have a climax top, and then which of course then blew it apart.
Yeah, here's the climax top there, and yeah, I mean, you know, was this here's
a double play from 15 all the way up on 30.
You know, was this a late? I remember that. Was this a late stage base? I think I remember people wondering about that at the time. But you know, again, just blow off this need to label things. You know, And I'm going to tell you, I think that's one of the weakest things about what O'Neill teaches is that they try to label everything and put a label on everything, and everybody gets hung up on the labels. And you know, things like pocket pivots, Bible gap up, 7-week rule, and the other tricks that we use, those are all derived from what we saw as the inefficiencies or insufficiencies of this whole need to just label stuff, you know, and have a big stamp and stamp everything. It's this or it's that, so don't do that. Somebody says, DDD, I sold out too soon. When would you suggest getting back in? When would I mean, what kind of question is that? Yesterday was a pocket pivot, so there it is, you know. That's your buy signal. And at this point, you know, we already talked about this, watching a pullback into the 10-day. So pay attention, please. MELI, watching this one come back to the 20-day today, and this might be, you know, notice the volume's drying up. This might be where it pulls back. This might have been premature, you know, just to launch out of here. You get a Bible gap up. It's a little bit of a squirrely stock. What I like about this, though, is that if you look at it, it is finally trying to come out of this long-term base, and that's probably constructive. So on this pullback, possibly Bible on the pullback to the 20-day. So. Sorry, don't worry, Scott. We forgive you. I figured you probably were distracted and didn't hear that part of the webinar. So, but you know, I'm just really upset that people aren't just sitting here glued to the screen and watching the webinar. I mean, where else do you get this kind of stuff where you can listen to me babble for an hour? Soda acting fine. You know, notice again, here's a 20-day moving average, so it finds support there. Now, I just point out, you know, again, and I've showed a number of examples here that illustrate the idea that the 20-day in this kind of volatile weird market seems to be helping on some of these pullbacks, on these breakouts, where you're not really using the 10-day because it hasn't followed it. So in this case, you can see it hasn't. It does follow roughly kind of sloppily the 50-day, but notice which moving average it really follows, the 65-day exponential, this black line. But in any case, I won't start digressing into all the different moving averages. If you are looking for a stock, you know, finding support, what you do is draw as many moving averages on your charts as you can, because then I guarantee you they'll always be finding support somewhere, and maybe that'll make you happy. Is it time to buy TBF and TBT inverse 20-year treasuries? I don't know. I don't really delve in this area. Do you, Dr. K?
No, it's, I prefer the safety of cash, so I could just deploy into stocks when the timing's right.
Yeah. Somebody's asking, is a way, I don't know. I don't really like this pattern very much. Is it a pocket pivot? No, not yet. I mean, it would need to be higher than this volume, and it would need to hold up above the 50-day. But it's a little bit sloppy. I think it's another one of these stocks that's a little bit marginal. I don't really care much for it. And I think that's pretty much it. That's all we've got, you know. So I think we've given you guys some food for thought here, and some ideas in terms of the stocks that we're looking at on the long side, and things, you know, the sort of the themes that are going on and the way I think you need to approach this market. And I think everyone should be in the chat room. I come on there as often as I'm able to. A lot of times I'm busy too, and I don't really have the time for it. And Dr. K shuns us all, but I'm always happy to convey things.
Well, you are my alter ego, Gil.
Yes, I know. So I will continue to function as such. And but I think it's a good place to trade ideas with other people, and you know, we've been talking about some pretty interesting things, and I think it's been helpful to people who've been in the chat room, and that's available to everyone. So last question. LGF, Lionsgate Financial, it's extended from the 10-day, so I don't know if it would be a pocket pivot. Maybe it's a viable gap up. I don't know. Dr. K, you want to rule on this one? And we'll finish up.
It's, well, it's got the earnings, good earnings report, so, you know, it's had a little mini gap here. But I would say it's, you know, it's more of a pocket pivot. But because of the viable gap up, or I don't even know if you wouldn't call it a viable gap up, but it's got a mini gap. So you could excuse it and say, you know, it looks pretty good. You know, it's had a good uptrend, it's a clean uptrend, and now it's moving higher. So you could take a small position in this one, and then maybe round it out when you get a second buy point down the line. And the earnings are looking just great in the stock. Institutional sponsorship keeps climbing. for what looks to be 7 quarters in a row, and the industry group is ranked 6th. So overall, it's a good stock. So yeah, there's nothing wrong with taking a position here and just keeping your stops tight.
Yeah, and good place to add. So anyways, you guys, that's all we've got. If you got any other questions, show up in the chat room. I'll be there probably a little later. And you can always email us with questions. I know it's a funky dynamic market, but I think it looks playable on the long side right now, and that's kind of how I'm approaching it. So, and Dr. K as well. So that's all we've got, you guys. Thanks for showing up as always, and we'll catch you next time. Take care.
So long, everyone.